Welcome to Talk Tickers. Today, we're diving straight into Uber's latest earnings call. Think of this as your fast track to understanding what really matters in their first quarter results.
Absolutely. And, well, it looked like a pretty strong quarter overall. Significant momentum, really.
Yeah, let's hit the highlights then. Uber saw a strong jump in their audience. Monthly active consumers, they said, up 14% to 170 million.
That's a big number. And people are using the platform more too, right? Trips were up 18% compared to last year.
And they seem to be sticking around. Retention rates apparently hit all-time highs globally.
That stickiness is crucial, isn't it? It suggests Uber's not just, getting new users, but the service is something people keep coming back for.
Right.
And the fact that gross bookings growth kind of kept pace with that trips increase, well, it tells you the activity is turning into real spending.
And on the financial side, the numbers were, pretty impressive. A record adjusted EBITDA, $1.9 billion.
Yeah, that's a substantial jump, up 35% year over year.
Plus, $2.3 billion in free cash flow. Healthy. And looking ahead to Q2, they seem optimistic. Continued strong top line and maybe even stronger profit growth.
Right. Those financials really back up the operational strength you see. It's not just about getting bigger. They're becoming, quite a bit more profitable.
Okay, so what's actually powering this growth engine? Let's dig a little deeper.
Well, a key thing they stressed was that the growth is coming from engagement, frequency, people using the platform more often, not just price increases.
Okay, so underlying demand is strong.
Exactly. And we're also seeing this interesting trend internationally in mobility. Growth there is actually outpacing the U.S. right now.
Oh, really?
Yeah, especially it seems around travel.
International mobility growth.
Right.
That sounds pretty significant. What's driving that? Specific regions or?
They didn't break down every single region in detail on this part of the call, but emphasizing travel, well, it suggests recovery and maybe pent-up demand in international markets, right, post-pandemic and all that. It also suggests their strategies in those markets are, working. Another interesting driver, the grocery and retail delivery side. That actually hit variable contribution break-even last Q4.
And is now accretive, they said.
Right, which is a big step.
Okay, variable contribution break-even, just quickly, what does that really mean for, someone listening?
Basically, it means that part of the business is now covering its direct costs. Things like paying the delivery drivers, the cost of the goods themselves. It's a major milestone for that segment's path to overall profit.
Gotcha.
And something else, they're seeing faster growth in what they call sparser markets.
Less dense areas like suburbs.
Yeah, suburbs, maybe even more rural spots. That's about 20% of their mobility trips now. And it's growing faster than the core city markets. So they're definitely expanding their reach.
Tapping into new customer bases then.
Exactly.
Yeah.
And it's not just cars either. They highlighted really rapid growth in lower cost options. I think two-wheelers, three-wheelers, very relevant in some international markets.
Right.
And maybe surprisingly, even the traditional taxi business is growing as they add more taxi supply onto the platform.
Taxis still growing within Uber. That's an interesting dynamic. Shows there's still demand there. Okay, let's shift gears a bit. Autonomous vehicles, AVs, sounds like they're making, actual progress.
Oh, definitely. That Waymo pilot in Austin, they've got about 100 cars.
Yeah.
And the utilization is apparently sky high.
How high?
They said busier in terms of trips per day than like 99% of human drivers in Austin, which is, And they're planning to increase that Waymo fleet in Austin, plus expand the partnership to Atlanta. So it signals a pretty serious commitment to rolling out AV tech.
And it's not just Waymo, is it? Their AV strategy seems broader.
No, not at all. They mentioned 5 different AV partnerships. Plans for deployments in the U.S., Europe, the Middle East.
5. Okay.
And that Toyota collaboration is particularly interesting. Kind of hints at a future where maybe Uber's AV software gets integrated right into cars from traditional automakers.
Licensing their tech potentially.
Could be. They also mentioned progress in China, WeRide, Pony.ai, and other partnerships with May Mobility, VW, Momenta for advanced driver assist stuff in Europe.
So spreading their bets, exploring multiple paths for AVs. What about the underlying tech approach itself?
Yeah, they talked about a shift there, moving away from like rules-based systems, they call it heuristics-based, towards these large transformer models like the AI that powers things like ChatGPT.
Okay. The big AI models.
Right. The idea is these models offer more flexibility, better scalability, helping the AVs handle more complex situations across different places.
Makes sense. Okay, competition, always huge in this space. Who are the main players they're watching?
Well, in the U.S. mobility market, it's still very much Lyft. Consistent, strong competition. Focus seems to be on service, quality. Insurance costs are a big factor for both of them, though.
Yeah, that keeps coming up. And internationally.
Didi is a competitor, particularly in parts of Europe and Latin America. But Uber seems to be holding on to market leadership in most places.
What about delivery? That's a crowded space, too.
Oh, absolutely. The U.S. delivery market is fiercely competitive.
Right.
But Uber's reporting, terrific growth there, top line, margin, and especially in that grocery and retail piece we mentioned.
Right.
Internationally, they noticed some consolidation happening in food delivery. Uber Eats actually organically climbed to #1 in the UK, which is quite an achievement.
Organically, okay.
Yeah. France is still a top market, and Germany seems to be showing a lot of promise. Their market position is improving there significantly.
Okay, let's talk pricing and affordability. How are they balancing keeping things affordable for users while still pushing for profit?
It's a balancing act, for sure. They mentioned that price elasticity and mobility, how demand reacts to price changes, it's pretty similar to how it's always been. Raise prices and transactions tend to dip, at least short term.
Okay, standard economics there.
Right. But they have been able to pass along some recent decreases in insurance costs to riders in the U.S. That's positive. And they expect insurance to be less of a headwind this year compared to the last few, maybe modest single-digit pressure.
And they're actively trying to manage those insurance costs further.
Yes, definitely. Investing in safety tech things like driver behavior scoring, and also pushing for policy changes like tort reform bills.
And on the delivery side, what about affordability there?
Big focus on memberships. Uber One. Over 30 million members now, apparently getting billions in discounts collectively. Penetration is over 60% in some context.
Wow.
And also using merchant-funded offers, buy one, get one free deals, discounts funded by the restaurants or stores themselves.
Right, trying to make it a better deal for the consumer. What about the broader economy? Are they seeing any macro headwinds impacting things?
They said they're watching closely, of course, but so far, not seeing significant hits to audience growth, frequency, or basket sizes.
Interesting.
Their view is that their main categories, restaurants, transport, groceries, tend to be, relatively resilient, even when the economy gets a bit shaky. People still need to eat and get around.
Makes sense. They also touched on large language models, LLMs. What are they thinking there? Still early days.
Very early stages, it sounds like. Exploring how LLMs could maybe improve the customer experience. Like using bigger AI models for better, more personalized search results when you're looking for restaurants or groceries.
Okay, smarter search.
Yeah, and maybe even conversational interfaces down the line.
Mm-hmm.
They mentioned working with OpenAI and others on potentially creating, more seamless ways to interact with Uber.
Interesting potential there. Let's talk mobility margins specifically. What's the outlook?
They doubled down on their commitment to showing steady year-over-year margin improvement in mobility. That's the goal.
Okay.
Q1 saw really strong profit expansion there, both sequentially and year over year. But they did caution that, maybe don't expect that level of jump every single quarter for the rest of the year.
Manage expectation.
Exactly. They also mentioned some go-get event, but didn't really guide on how that might impact mobility margins later in the year.
Okay. And finally, let's loop back quickly to those less dense markets, the suburbs and beyond. What are the opportunities, maybe challenges there?
So for mobility, they kind of figure the frequency opportunity might be lower. Makes sense, right? More people own cars in those areas.
Right. Less reliance on ride sharing for daily commutes, maybe.
Probably. But the flip side is that prices and maybe margins could actually be higher there, especially with products like Uber Reserve booking rides in advance. That sees higher adoption in sparser markets because people value the reliability. Apparently 40% of Reserve trips are now for everyday use cases.
Ah, interesting. Reliability premium.
Exactly. But for delivery, frequency continues to grow strongly in both dense and less dense markets. People everywhere seem to like getting stuff delivered.
Okay, good distinction. Well, this has been a really insightful look into Uber's first quarter. Now for our segment where we put on our slightly more speculative hats. Remember, everyone, this is purely for informational purposes, absolutely not financial advice.
Okay, let's think. Given that very strong, multi-pronged push into AVs we talked about, and those partnerships, like with Toyota, here's maybe an outrageous but plausible idea.
Go on.
Consider a long position, maybe, in a smaller specialized company focused on LiDAR technology.
LiDAR, the laser sensors for AVs.
Exactly. The thinking is, as Uber and its partners really start scaling up these autonomous fleets, the demand for those crucial advanced sensor systems could just, explode. And that could really benefit some of the niche leaders in that specific tech.
Okay, a bet on the enabling technology. What's the other side of this non-advice trade idea?
Simultaneously, maybe think about a short position in a major publicly traded parking infrastructure company.
Parking garages, why?
Well, the logic, however speculative, is that if autonomous ride-hailing really takes off, especially in cities, does it significantly reduce the need for personal car ownership? And if fewer people own cars, especially in urban cores,
they need fewer parking spaces,
potentially impacting the long-term revenue for companies whose whole business is providing that parking. Again, purely a thought experiment, not advice.
A thought-provoking pair of ideas. Definitely playing the long game there. All right, that wraps up our deep dive into Uber's Q1 earnings call. Key takeaways, robust growth continues across both mobility and delivery, big strides, it seems, in autonomous vehicle tech and partnerships, and that constant focus on profitability.
Yes, strong quarter, clear strategic focuses.
As always, we encourage you to check out the full earnings call yourself, do your own research. What do you think about Uber's big AV ambitions or their push into those less dense markets? Let us know. Join the conversation online. Thanks for tuning in to Talk Tickers.